Hey folks, my presentation today is for educational purposes only. It does not constitute any legal advice or opinion. So please do not use any of its contents without seeking a professional advice. I will be talking about income limitations today. General income. It includes all income other than passive income. It includes most of the foreign source active business profits of domestic corporations and their foreign subsidiaries. Passive income. Passive income means dividends, interest, royalties, rents, and annuities. Net gains from the disposition of property that produces dividend, interest, rent, and royalty income. Net gain from commodity and foreign currency transactions. Income of a foreign passive investment company that has made a qualified electing fund election. There are many exceptions to the general rules for determining passive income, including the following items of income which are treated as general category income. Highly taxed income. Passive income does not include any highly taxed income. Income is high taxed if the creditable foreign taxes related to the income exceed the product of the amount of that income multiplied by 35% in the case of a corporation or 39.6% in the case of an individual. This exception limits cross crediting of low tax and high tax passive income by removing any investment type income that gives rise to excess credits from the passive limitation income. Controlled foreign corporations and 1050 company look-through rules. A U.S. shareholder allocates payments received from a controlled foreign corporation, including dividends, interest, rents, and royalties, to the separate categories of income limitations based on the character of the controlled foreign corporation's earnings. A look-through rule also applies to dividends received from a non-control Code Section 902 corporation. Active rents and royalties. Passive income does not include rents and royalties that are derived in the active conduct of a trade or business, such as royalties derived from intangible property of the type that the taxpayer regularly produces. Export financing interest. Passive income does not include any export financing interest. Financial services income. The term financial services income means income derived in the active conduct of banking, insurance, financing, or similar business by a person predominantly engaged in the active conduct of such a business. This provision allows financial services companies to engage in cross crediting in the general limitation with respect to all their financial services income, including both highly taxed investment type income and highly taxed service income, fiduciary, investment, banking, and trust services. Look-through rules. Look-through rules apply to income received from a controlled foreign corporation, including dividends, interest, rents, royalties, and Subpart F inclusions. The specific look-through rule varies with the type of income derived from the CFC as follows. Dividends. Dividends paid by a CFC to a taxpayer who is a U.S. shareholder of the CFC are allocated between passive limitation income and general limitation income based on the ratio of the CFC's earnings and profits within each category of income to the CFC's total earning and profits. Rents and royalties. Rents and royalties paid by a CFC to a U.S. shareholder of that CFC are allocated between passive limitations income and general limitation income based on the extent to which the related deduction is properly allocable to the CFC's income in that category of income. Interest. Interest paid by a CFC to a U.S. shareholder of that CFC is treated as passive limitation income to the extent of the CFC's foreign personal holding company income. Subpart F inclusion. A Subpart F inclusion for any increase in a CFC's earnings invested in US property is allocated between passive income and general limitation income using the same rule that applies to the actual dividend distributions. In contrast, a Subpart F inclusion for Subpart F income is allocated between the separate categories of income based on the nature of the CFC's taxable income that gave rise to the Subpart F inclusion. Passive foreign investment company inclusion. If the taxpayer is a US shareholder of a CFC that also is a passive foreign investment company that has made a qualified electing fund election, then the look-through rule that applies to Subpart F inclusions are also applies to qualified electing fund inclusion from that CFC. 1050 companies. Under the 1050 company look-through rule, a dividend is allocated between passive limitation income and general limitation income based on the ratio of the 1050 company's total earnings and profits. Look-through treatment does not apply to interest, rents, and royalties received from a 1050 company. Partnerships. A partner allocates its distributive share of partnership income between passive limitation income and general limitation income based on the character of the income at the partnership level. The rules applicable to partners in a partnership also apply to shareholders in an S corporation. Allocating foreign income taxes. In order to apply the separate category of income limitations, foreign income taxes also must be allocated between the passive and general income limitations. Foreign income taxes are allocated to the category of income that includes the income on which the foreign taxes were imposed. Folks, I have prepared this lecture from the book Practical Guide to US Taxation of International Transactions, ninth edition, written by Robert J. Missy Jr. and Michael S. Shadewald. Publishers are Walter Kluwer CCH Incorporated. My name is Mansoor Sohail. I'm an accountant and I operate from Toronto, Ontario, and my specializations are taxes for Canada and USA. Should you have any question, please give me a call at 416-283-8774 or email me at taxservicesguru@gmail.com. Thank you for listening.